Good morning, everybody. This is Patrick MontesDeOca with the live trading room here at the Equity Management Academy. What I would like to do here on this segment is to essentially take a look at the silver contract and see what has transpired since we published the report to buy silver at the market a few weeks back on Trader Planet. And this was sometime back in the early part of the year, but let's take a look at the current contract, which is really what I want to take a look and see where we're going to go from here, what's going to happen from here. We have risen since about December 20th from a low of about 1568 to a high that we saw here recently of 1787.50 as of yesterday, February the 8th. And what I'm interested in is taking a look at the current prospects of the market and where we're going to go from here. We've pretty much have captured over a $2 move, and our expectation of this rally was about $2.50, and we've captured more than $2 move. And so the VC price momentum indicator, which is the indicator that we watch, that essentially gives us an indication of major turning points in the market, is indicating to us that we want to take a defensive position, that we want to take a look at where we are right now. And the expectations are that we might have potentially seen an intermediate to short-term high in the silver market at 1787.50. And assuming that is the intermediate high, let's take a look in using Fibonacci retracements, and let's see what the market potentially is telling us it could go to. And I also want to show you what the code are, what our codes are indicating, that basically is confirming and validating this prospective analysis that I'm giving you, so that if you are a buyer, or if you bought silver in the last a few weeks, to take a look at the code, at the VC price momentum indicator, which is strictly a mathematical formula, away from the chatter, away from what you hear, what you read on the internet, with regards to an opinion fundamentally. We pretty much take a look at the market from a mathematical point of view, and this is a mathematical formula that is telling us that potentially we have accomplished and reached a high short term. If that is the case, what I want to show you here is one of the reasons why we feel that this is potentially in the works. What you see here is a series of lines that indicate for us the codes and price indication for us to identify supply. The supply is identified by the color red, and as you can see here, the algorithm has specifically told us that we should be selling into this rally up to 1780, 82 level in silver. That target was accomplished yesterday by a rally of 1787.50, and also we have levels below which indicate there are lower levels as well that the market indicates to be selling into. But primarily what it identifies for us is where the supply is, and the algorithm tells us that if we close now below 1780 for the week, that we should be looking for a correction. We have the signals coming in on the daily algorithms. We have the signals coming in on the weekly algorithms. And so it's a pretty compelling picture, what we call harmonic timing. And that is when all of the daily indicators aligned with the weekly indicators to give us a high probability mathematical formula that when the price does reach these levels, that these are levels to be taken for profit now. These are levels to be taken as the potential for a correction from these levels. Now, that correction can start, you might say, as it potentially can even test as we close to that 1759 level, which is the daily. 1747 is the lower level. But I believe the magnitude of the rally, which has pretty much fulfilled the profit objective that we have made for this leg, is indicating that potentially what we've seen here since December is the first leg. If you put into Elliott wave analysis, and we could be going into a second wave correction, and that could be down into the 1712 to the 1676 level once again. Now, in the application of Fibonacci earlier, the high probability level is that this market could come down to that 50% Fibonacci retracement, which is 1676. Below that, we're looking at a 61.8% retracement of 1650. So the indication is, and the algorithms that we use, this is the VC price momentum indicator, is telling us now, so far for this week, prices have activated the weekly lower levels of 1712 to 1675, with a high probability of 1675 being accomplished over the next couple of weeks. If you would like to see more of the work I do here in the live trading room, please send me an email. You can reach me at support@EMA, the number 2trade.com, or simply you can call me at 805 area code 418-1744. I'll be more than glad to send you a pass so that you can come and see live what I do here at the Equity Management Academy live trading room. This is Patrick MontesDeOca. Once again, a pleasure to share this information with you. Until next time, my friends, be well. Good trading. Be safe.